Hey everybody. Hey. Good morning. Everybody have a good President's Day. Enjoy all the parades on the holiday, hopefully. Anyway, a guru friend of mine, he's like, is it really a holiday if they don't have a parade for it? Just that's a running inside joke in my mind. Anyway, had the peach monster this morning, as the words of Castor Troy. You know, I could eat a peach. Anyway, we'll go for the rest of that line. Welcome everybody. Welcome. Capital One announcing they're going to buy Discover Financial Services, which is basically Discover Card. And interesting, right? That presents an interesting M&A situation, merger and acquisition situation in the credit card space. So if we pop over and look at it, bearish for Capital One. That's typical. The buyer usually drops, and the one that's getting purchased tends to pop. They were offering a 27% premium on Discover Financial over the current prices. You get 1.0 whatever it is shares, and if you missed the headlines right here, Capital One, on the Wall Street Journal even, Capital One buying Discover Financial $35 billion deal, which that's like a rounding error in the price of Nvidia. It's kind of funny. Anyway, Nvidia adds the value of Discover Card in about 5 seconds. It seems like we'll talk more about Nvidia and SMCI here in a few minutes. But hey, I mean, there it is: 1.0192 Capital One shares for each Discover Card or Discover Financial share, representing a premium about 27% based on Discover's closing price on Friday. After the deal closes, Capital One shareholders will hold roughly 60% of the combined company, with Discover shareholders owning the rest. Interesting, eh? And the whole debt thing is one reason why. Essentially the company taking on kind of debt, even if cash buyout, whatever, they're diluting their shares, and that causes the price of Capital One to drop, while it causes Discover Financial to pop. They're up 12% in the pre-market. Capital One down 5% in the pre-market. Hey, if regulatorily wise, if they can pass all the regulations, all the regulators get it through, it's actually a good thing for Capital One. Capital One doesn't, despite being a large credit card provider, they use Visa and Mastercard. And so the networks they run on are Visa and Mastercard. Discover is the only credit card processor out there that actually runs its own network. Discover Card runs its own network. It's a it's a third place network. It's much smaller than Visa or Mastercard, especially outside of the U.S. But what can Capital One do with that? It opens up a lot of realm of possibilities to be able to process payments. Capital One at this point, despite all the Capital One cards and the Vikings and the beard competitions and all the things that they advertise, they don't run their own processing network. So this could be beneficial. Discover maybe hitting the limits of what they've been able to do with their network. Maybe Capital One, with their financial resources, could expand and improve and provide extra fintech, finpub, tools to expand and compete with Visa and Mastercard. I'm not opposed to the deal. I mean, I've been a long-term customer of Discover, and it's kind of a bummer to watch them potentially go away. It's always, throughout my entire life, anytime a pretty solid product I use gets bought out, it tends to get crappier. I mean, let me know in the chat if you've experienced that before. But we'll see. So anyway, they in the article they discussed that they plan to probably switch over some or make some offerings on the Discover network and start using that, but they'll still stick with the Visa and MasterCard, since the majority of the deals they already have exist on Visa and MasterCard's network. Plus, it provides more international acceptance, abroad, worldwide acceptance than Discover's network, but it's opportunity to build out and expand and improve the network they've already got. Anyway, moving on. Is it a deal to play this? At this point, the deal's already played out, and this will probably rise just a little bit to the 27% premium between now and whenever they close the deal, and it'll be subject to if regulators sue it or claim whatever. Pocahontas is already out there saying that it's anti-competitive, whatever. So we'll see if they can actually get it through the regulators and get it approved. But I see it as a good thing for competition against Visa and Mastercard. But we'll actually see how this actually plays out. So Capital One, not a credit card processor, they're just a credit card sponsor and a bank. Discover Card has no physical. Well, they have one physical bank location in Delaware, but otherwise, it's mostly just an online bank that Capital One would be buying. A lot of savings accounts with Discover, apparently. All right. Moving on. We should go ahead and hit the disclaimer. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I've gotten something right in the past doesn't mean I'll ever get anything right in the future, which would be a huge bummer because I kind of like getting stuff right. Get lucky a lot. Anyway, this presentation is intended to be informational, educational, fun, and entertaining. It's not a recommendation to buy or sell anything out there at all. At all. Stuff from gurus, stuff from, anything. Especially not stocks, options, bonds, cryptos, futures, Forex. Don't buy them. Don't short them. Don't long them. Don't trade them. And if you desire personal financial advice, hire and consult a financial advisor that has a fiduciary duty to give you advice based on your situation, which is not what I do. That's not what I do at all. I'm just here just the guy sharing what I'm doing, getting a few predictions right, and some of my followers make a crap ton of money. So I know Goose has done pretty well for himself. Sledge, you've probably done pretty good for yourself. Wrongomer is increasingly doing well for himself. Nikki, I know you crushed it last year. Laura also crushed it. Lots of you just absolutely doing amazing things. And I love it when you share with me. So thank you all. It just warms my heart to know that I'm making a difference in other people's lives and the lives of your families and stuff. S5FI, still, look at this. Oh boy. Anyway, Sledge says, I love getting lucky. in more ways than one. Oh goodness. Whew, I may have turned pink there. Love it. Hey Laura, just talking about you. So thanks for being a follower. All right. Well, coming up the rest of the week, economic news-wise, it's kind of benign. The Fed minutes coming out tomorrow. It's just the minutes, not a new FOMC. Don't get confused. It's not a new meeting. It's not a new rate change announcement or anything like that. It's just the minutes from the last meeting we had a couple weeks ago. And but in the minutes, the bots usually go a little crazy, especially if the language in the minutes is a little more hawkish than even Jerome Powell was in his speech. So be careful out there on that one. That could cause some volatility tomorrow afternoon. The rest of the week, just kind of benign, just regular old, we got flash services, flash manufacturing, PMI. The big news of the week, though, is NVIDIA earnings. Dun, 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 dun. And I don't even have my chart up for that. Lame. I don't even know what the heck. Still on yesterday's presentation here. NVIDIA, as you can see right here, Wednesday, the little moon means after the close. So tomorrow, after the close, we've got fireworks. And interestingly enough, we've got the skew. What does skew mean? It means when you look at the options, the market is pricing in an explosion higher and not really a drop. Although the move they're pricing in is pretty ridiculous for NVIDIA. And if we come over and look at, I brought some more fun charts right here. If we look at the cost distribution, most people holding the bag on NVIDIA are sitting in profit. Just these ones that bought up here. We had a little spike up here on Friday, and or I guess last week, really, when we look at, the last few days, we've had some people load up, but the majority, I mean, each bar represents a significant chunk of shares. Altogether, that adds up to the statistical average price that people are in. And right there, average cost, $550. We're sitting at $726. The average person is up 50%, average shareholder. And that's based on some statistical garbage that this is from Webull in the Webull app, if you've never seen this. So, hey, I like being up 50%. And the closing price on Friday was $726. Now, compare and contrast the way this chart looks to SMCI. Bag holders, majority of the shares were transferred. A large volume of shares were transferred while we were sitting up there right near those all-time highs. Those wicked, crazy, ridiculous highs. We saw this a lot in GME and other squeezes where people that had been in down here flipped their shares to dumb money, if you will. That's why they call us dumb money. We're suckers for, oh, it's going up forever. Oh, it went to 1,000. Why not 2,000, 3,000, right? It can't possibly go down. It goes up every day. Guess what? That's what a bubble looks like. It will not surprise me to see this thing drop right back down in here and this thing shift all the way back down. And when we look at it on the charts, NVIDIA's holding up really well. Just down at 719 this morning. A little bit of retrace. But SMCI hanging in there. It's been kind of volatile this morning. Volatile on the restart here. We look at the extended hours. You see we've had some pops and drops. But that's not exactly a bullish price action. Watch for another big drop. If you're long, make sure you know where you're wrong. All right? It's not about not being wrong that costs you the big money. It's staying wrong. If you think it's going to 2,000 or trucking on higher, know where you're wrong. Know where your eject button is. I'm actually got puts because it came up within $10 of that 1090 price I was looking for. We got within $10 right up here at the highest high right up here. I mean, shoot, I missed it by $10 on a move that was ridiculous. The move from 200 up to 10,090. Is what I thought we'd hit. We hit 1080, and sucks when I miss it, right? I bought puts several times on the way up, and I'm at 400 and 500 strike. Had its way on down, and out March, April, May. Several expirations, giving it time to work, and you're like, well, JT, come on, let's be real. That thing could go rocketing off, right? Well, I mean, let's look at some past ones real briefly before we jump into what's moving today. The GME here. We saw that thing. Remember there's a 4x split in here. So prices were 4x with the numbers here. That thing was basically 500. It went from $9 to 500. For those of you that remember this, and then we dropped down to about 40. We quickly, look how fast this dropped. We saw a secondary pop and a bigger drop. That went from the high down here in just 4 days. We came on down to the ultimate low in about 3 weeks. When the party's over, the party's over quickly. All right. Maybe, well, that was GME. You know, this isn't GME. You know, we can pull up these all day on different ones that have done this. Here's Tilray. The IPO, the launch, we're going to the moon. This one didn't have any split in it. So this is just the real prices here. We went from an IPO price down here at 22 bucks, right up here to 300 bucks in pretty short order. And then look how fast we gave back that initial drop back to from 300 back down into $100 price area. Then we popped again, and I don't know if I need to remind anybody, but this one's hanging out down here at $1.90. I'm not saying that SMCI is going to $1.90. No, I'm not saying that at all. I'm just saying we're probably not going to 9 gazillion. All right. It's just probably not going to happen. So be careful out there. Probably coming back to the roadmap line at least somewhere around 400 would be my expectation, and maybe down to 200 because that's what the options are pricing in, is a move back down to 200. Pretty wicked. It's pricing at a $600 move. $600 move. And be like, how do you know the options are pricing that in? You go sell the call and the put at the money for January 2026, and look at that premium that's there, about $600. That means the option market pricing in $600 move. That's back down to 200. Be careful out there. All right, let's look at the S&P since the market just opened. Market just opened. And we have a drop. Gapping down a little bit. That was a lower high. Extension lower would put us right down here in the 48, 4900 area. Be careful out there today. S5FI still has not made it down to the bottom. Only a matter of time before we do. It stocks about the 50-day moving average for the S&P 500. And got the volatility on the stocks about the 20-day. We could see one little pop, and then we could see a drop. This one tends to be a lot more volatile and get more revisits than the 50-day. Imagine that. 50-day, more time, slower moving average, 20, faster moving average, and more volatility. ES, looking at the ES specifically, overnight action, since this opened up on Sunday at 6 p.m. It was open yesterday, if you didn't know, till 1 p.m., closed early, reopened at 6 p.m. yesterday. Just kind of been lackluster, not very clear. Just Sunday, Monday, and into the day. It's just kind of been blah. A little bit bearish, but just non-committal. So we'll see what actually happens here today. I'm thinking, based on the S&P, on this chart, looks like we're heading on down. We may retrace that gap and then cruise on down. The ES is just the futures, and they open at 6 p.m. on Sundays and trade usually till 5 p.m. Yesterday was an early close, and then we reopened at 6. So why do I watch the futures? Because there's more data here. The S&P it wasn't open at all yesterday. So futures market was, and gives me some data to look at. NQ, which is the NASDAQ futures, also looking kind of blasé, non-committal. If that was a wave 1, 2, this is not looking like wave 3 action so far, but we might see some acceleration here today. Those downside targets, potentially 1740, 17,400, 17,300. And we'll see what cooks here after a while. If we start getting some acceleration, this could develop into a bigger, faster move down. Russell, again, not looking too bearish. If we pop back up to the daily on this one, zoom her up, Buttercup. Zoom her up, Buttercup. We did pop up and retest. Tried to go a little higher. if we break down below this level at this point, I think we're probably heading on down to my target area. It's increased volatility. It could break out and go higher, but and it looks like a lot like a B wave consolidation, and we may this A wave down, B wave overlappy garbage, and we could quickly see this break down. 1, 2, 3, 4, 5. That could be a 5 whip in kind of a diagonal of a B wave. We can see this break down and head down here very, very quickly. Please be cautious. Please be cautious. And you're like, RTY, I've never even heard of this index, right? It's the IWM. It's the small caps. And we could be heading down to that 180 price area down there. Significantly down. It'd be pretty sweet. I have puts on IWM. CL. Still in the zone. Hadn't broke out. Hadn't broke down. Sideways until we either break out and go up here or break down and come down here. That's the long and the short of it. And there goes Russell breaking down. Was that below Thursday? Yeah, breaking below Thursday. I'm going to set my alert down here. I want to know when it gets to the bottom. Potentially breaking down. Gold. Dun, 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 dun. And that could have been... That could have been it. But I don't think so. It doesn't look clean. That could have been it. I think gold needs one more flush. And this could be the wave 1, 2, and we could get significantly down here. It at least needs to get below that low from mid-December. At least. Bitcoin was being really strong. Looks like it's getting slammed back down. Had a big freaking green BFG candle, big freaking green candle. Now it's turning red. Imagine that. Let's look at the all-time history here. Still green on. Still green. It's not. It was up here before I went live here. Now it's slammed back down to the consolidation. This is typical of Bitcoin that we see a consolidation before the next pop. You can see it right here. You can see it over here. Consolidate and pop. Even after a big run, we consolidate, pop further, consolidate, pop further, consolidate, pop further, consolidate, and drop. So be careful. We could see a drop, but this looks like it's going to get, since we did the drop right back here, this looks like a consolidation before another pop. We did a consolidation here, and a nice pop. Consolidation here, probably get a nice pop. It's possible we hit an all-time high before having event. Talked about extensively yesterday. If you missed the live stream, please go back and watch yesterday. We talked extensively about halving and all the scenarios surrounding halving and a variety of crypto opportunities that are out there surrounding halving. And then what I expect to happen, not just between now and April, but now in December, now in next year, in 2025, and 26, and 27, and 28. I talked about the whole big picture. And if that's something you're not necessarily clued in on, go watch my video from yesterday. It's right in the live streams. Just hit the live stream tab. Go check it out. Ethereum coming up into more resistance here right around 3,000. The next major resistance up is going to be up here at 3,500. And I'm at my core position. I'm not leveraged up or anything. I booked some of it off on this pop. Didn't add back because we didn't get to any of the normal places I would find support and reload. But that's looking pretty strong, and we may get to 35. And this one does have a potential ETF approval in May. Now, this whole thing could combine together with the Bitcoin halving event, so that there's a lot of catalysts coming together between April, May, June for the crypto markets. Stay right here. Make sure you subscribe. Make sure you like and hit the bell for notifications so you know when I go live and talk about this stuff. I'm going to be on top of it. I promise. Be on top of it. Be all over it. I love this stuff. And as my new intern Will was saying yesterday, man, you keep up with this stuff. Like, he's like, I don't even understand how you can keep up with all the different pieces, all the different players. He's like, it really is your sports. Like, he's like, instead of keeping up with sports, you really do keep up with all this stuff. And it was kind of funny. Right there, DXY, hanging. If we break down below this orange consolidation box that before we popped up and hit the resistance, if we can break back below it, we're probably coming down to the mid-90s. Otherwise, we may bounce off of it and head up here, cruise up here to the 109 area. So, there you go. There you go. All right. NVIDIA. Uh-oh. 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 Had an alert there because we may see a bigger retrace. I actually have some puts. If we get down to this level, I'm probably going to book my puts. I do kind of expect it to come all the way down here, but I may not stay around for the ride. We are overcooked. We're at those upside fib lines. Yeah, if I was gonna play roulette on earnings, since the upside stacked and the skew is positive, I'd probably play the downside because the reward is much bigger than the upside. But been wrong before. I mean, we played Apple, lost. We played Tesla, won. I mean, we'll see what happens. I've been wrong before. I get lucky sometimes. This is more like playing roulette, though. Rolling dice. It is not a high probability trade. It's just looking at the probabilities of where would you make more money. You'd make more money on the downside. That'd probably be where I'm playing. That is where I'm already playing. And if we flush this baby, holy. Uh-oh. 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 Now somebody asked me, well, in my Termite Trading Lab VIP group, I put a $100 price tag or price limit order on my $500 puts. They were like, JT, why'd you do that? I was like, look at the at the monies. This was on Friday. And when you look at the at the monies, the $800 at the monies, we're trading for $100. Right? That's a good way to guesstimate your price target. So if this thing dropped from 800 to 500, my $500 puts should go, maybe not all the way, but should go to like $100. Maybe even higher because the IV is going to rocket higher. So that's one way to estimate, is just to look. Like, you'd be like, well, if my $500 put goes in the money, what are the in the monies trading for? And you just roll up the option chain and it tells you the prices. It's not like you have to use any kind of online calculator or anything like that. Just scroll through. And if you think it's going to take a month for you to get there, jump a month on the expiration. Jump a month whichever way. And you would actually jump a month closer and see what the prices at the money are. If you think your prediction is going to take a month to play out, just jump back a month. Get a month closer to expiration. Look at what the at the monies are. Look at what the look relative to your price target and see what the price is. And that's a good way to estimate what you could put a limit order for. And be conservative. Jump it down a couple bucks. I really hope that goes to 500. That's going to be so sweet. So sweet. MSTR. Uh-oh. Probably going to fill that gap. Then we'll see what happens. Came up a little shy filling it on Friday. We'll see what happens. It was on the big poppers list. Now it's on the list now. Walmart's. Look at that. Go, baby, go. Earnings last time, big drop. Earnings this time, big pop. 618 is pretty much done on this move. And pretty much done. That's the roadmap line bounce for you. Playing out. 182. I wouldn't expect much more for now without a retrace. And meds. Don't trade this junk. Don't do it. Don't do it. Don't do it. It's biotech, medtech. I wouldn't do it. SPRC. That's pretty much everything we look for a dumpster fire. Reverse split. Crazy volatility. I wouldn't trade it. ATHE. Rocketing higher. That's going to be a pro shares. Probably going to be a leveraged ETF for Ethereum. Be careful. 70.90. It's It's kind of the highest I would expect right now, possibly 79. Moving on, GFS, Global Foundries, just choppy sideways underneath the roadmap line. Looks kind of bad, despite the pre-market pop. MDT, man, bleeding it right back off. NVS. Coin. The only two medtech things I would mess with right now, NVO and LOY. Why? Because they have a transformational drug, but they're both on the upper end. You got to wait for a pullback, all right? Lilly right here may even become the first $1 trillion drug company. Look at that. 723 billion. Tesla, we were considering in the Magnificent Seven, and it's already Eli Lilly, already bigger in market capitalization terms than Tesla. Crazy, right? Crazy. We have to add an L into my Mama Natalie or something like that. Magnificent 8. Throwing up Eli Lilly with their GLP-1 drugs. NVO coming in a bit behind, but close on the heels. Just throwing that out there. Something I looked at yesterday. Rio. And, well, I just jumped all the way down the list. Let's jump back up. NVS coin. Probably going to retrace if we hold a 618 retrace on this. That'd be pretty sweet. Let's see. There. I'm going to be looking for a move back down in this zone and a hold and a turn back higher. And if we do that, I might load up on that one. DEO. That's super bearish. Super. I don't have like I need to make a superhero that's like the super bear. I mean, that's like super bearish. I wouldn't mess with that. It's not dumpster fire territory. I mean, we don't have a reverse split. That's like one of the keys for actual dumpster fire. But it doesn't look good. I wouldn't mess with that. Could it form a reversal? Yeah, but if that's going to be a reversal, I want it to be above the roadmap line, come up, come back, retest it, hold above it, and start going up again. Targets, because we haven't really gotten to levels where I feel like there's major long-term support. If we look at this, sure, we got into that gap, but look at this. We dipped below the 618 of that whole big move up, and just doesn't give me that warm fuzzy feeling right now. It just doesn't. Like, and that was just, a move up. It's not the move up. You zoom out further, that's just a move in this whole bigger trend. Correcting back down. If it came down here, that might be something like, oh, that's interesting. But right now, not for me. TGT, Target, probably moving up in sympathy with Walmart. But hitting their head on this consolidation from back here. And they consolidated there a lot. Look. If we can get up above this 175 area, we probably go fill the gap up to 200. We'll see. We hit the downside target on target, and I haven't really paid attention to it since. IOVA. That's a biotech, but that actually looks like Head and Shoulders and could, in fact, go a little crazy here. Shoulder, not going to be perfect. If I'm not opposed to taking shots at things, if that's going to play out, I'll move up to 17-ish, maybe go for 16, 12 to 16. I mean, that's pretty fair. You can do it with a few shares. If you have some high-risk money, IOVA could work out. It's a biotech, medtech. Be careful. It's one of those things that doesn't always follow the patterns. EDU, Targets up there, support down here. Kind of looking overcooked. Resistance 93. Be careful. DG. This could start looking like a reversal here. Came down to the support, came up to the roadmap line. If we can break through, come back, retest, we can start changing the tide on DG. That indicates the economy was actually strong. This is starting to indicate that economy might be weakening. DG, AZO tend to do pretty good when the economy's doing crap. Interesting. Where'd my mouse go? There it is. Yeah, DG looking like a crappier out of the things that make a lot of money out of the lower income brackets. RAPT. Don't mess with that. Mastercard. That's fully cooked on the upside. Watch out for a pullback. Back to the roadmap line. Same with Visa. It's already been working on coming back. Like those are both way overcooked. Way overcooked. ASML. That one's overcooked too. Traded my piece out of that one. Haven't really looked at it in a longingly way since then. LRCX. Getting right up to the head and shoulders target. Watch out for that one to break back down. HOLO. Whew. I would not touch this. Let's look at EKG. That one shows up quite often. It's got a lot of volatility right now. Meme stock's going a little crazy is what that says to me. Home Depot reporting weak sales, but beating on the top and beating on the bottom. So pulling back a little bit, but big nothing burger. Nothing burger. Looks kind of bullish, but we'll see if they can actually pull it together and break out bullishly. I was kind of bullish on them back here, but they decided to consolidate more. Shares would be the only way for me to play that right now. Adobe. Oh, look at that. Right back down to the roadmap line. Adobe might pop on earnings coming up, depending on what they do between now and then. That was a beautiful retrace right into the support zone. That's really strong. Now, could they retrace further? Sure. I could come back down here. Come back down here, right over here. Why do I say that? Because that's been kind of a resistance zone on the way down. We could retrace it right back down. We kind of gapped up through it on the way up. We could come back, revisit that. It's not that far away. I mean, it's all relative. 70 points down from where we are. It just dropped 100 points. So another 7. What's another 70 between friends? I mean, come on. You know, SMCI dropped 200, and then whatever we got today so far, another 50. Let's go. Let's get another 300 or 400. Let's just correct that one back out. Fix that one. ARM probably coming back. We may flush out all the ridiculous stuff. Keep moving the freaking alerts. Gosh darn it. I can't move an alert when I try, but when I'm not trying, I move them constantly. Expect that one to come back, at least break back into where those highs were before we popped. I'm not trading ARM. Visa, like I said, FNGU means like that's fully cooked. That is leverage though. Be careful. Leverage stuff doesn't always follow the patterns. Lows, working with Home Depot and Sympathy, and they've got their earnings coming up next week. Caterpillar, pitter patter, Caterpillar is probably fully cooked to the upside, and we probably need a deeper retrace. Kind of did what I thought we would do already, which is retrace back to that 1272. We could push on out, could go to 380. I would be careful. It may push on back down to the breakout level where we've had the highs here. Let me push back to the top of that green box. Roku. Boom. I get lucky. I don't know. Could it go lower? Sure, 55. But sometimes I get lucky. I mean, I don't even know what to say. There you go. Hopefully somebody made money off that. I did not trade that. Hopefully somebody didn't lose money on that. Staying long. Trying to fade me. Hopefully. Let me know if you made money. You can either let me know, private message in Discord or in the Termite Trading Lab if you traded this or if you got out and saved yourself the pullback. I just like to know if me talking about these things, if people actually do it. There it is again. Once again. I mean, look, right in the target. Like, pachow. Boom. As I say all the time, boom. Anyway, there you go. Walmart, Vizio's not Vizio. Vizio is not a competitor to Walmart. Vizio is not a competitor. Vizio is just a TV supplier. So I guess Walmart's getting in the TV business. Interesting. TCMD probably going down. In a blaze of glory. That looks like it. That looks like it's cooking a Head and Shoulders. Now, the target for that would be 0. I'd be careful on that. Doesn't look too good. CMT. Groupon. Roku doesn't make TV. I mean, they make TVs, but they're not. It's not really a competitor. I guess if you want to look at it that way, Vizio doesn't do content, and Roku does content. Roku does set-top boxes. Vizio does TVs. I guess you could say it's the same segment, but it's not really the same segment at all, in my mind. Global payments, probably going to come back down. Tesla. I don't look at it like competitors, so it's not the... So Tesla, like... has not been able to fill the gap yet. Head and Shoulders didn't play out all the way. It's just a kind of sloppy Head and Shoulders. Very small time frame. That would be right back up in that neighborhood, close to the roadmap line. I bought my 5 shares. I don't have any kind of leverage. I don't have any big position. And I'm just sitting, just waiting. Bought 5 shares because I said it was going to 180, and I bought it 180, well, 181. I have another buy at 150 because I still think it might flush down. There you go. There you go. Rio looks like crap. If that breaks back above 72, could be a move to 77, 79. AMD looks like we're going down. Target would be 85.90, maybe 100, 85.90, 100, somewhere in there. Target. Let's go ahead and draw it now. TTD. Wicked chart, man. Wicked chart. I got nothing. No high probability setup here. It's not even a solid roadmap setup. Might go to 100, maybe 110. Nothing that makes me feel good. I just don't like that pattern. I see a lot of stuff. I don't like that. That looks like it may, that's a 3-wave up is partly why I don't like that. And the red candles, that may make a lower low. If it did make a lower low, this could clean this up. Well, it doesn't even have to make an actual lower low. Could just come right back down here to 64 and then do something constructive. And we could go up. FAS, big term, I'm actually really bullish on this. Like, really bullish. Huge bullish potential. You can see. Ridiculous. Ridiculous. I have to turn on log mode. Ridiculous. Look, see this? Potential huge move on FAS. But we got to get through the current crap. Huge potential breakout move. I need that to break up, retrace, and set me up. ENPH, that is a leveraged instrument, so be careful. ENPH, still looking like crap. Lower high. Watch out for that move. Could it break higher? Yeah, it's like if it breaks up, could go up here. If it breaks down, could go down here. Coin flip, nothing solid right now on ENPH. All right. If anybody has a big takeaway from today, let me know in the chat. I'd love to know what you liked most about today's session. I mean, give me some feedback. Let me know. And if you're watching this later, let me know in the chat or let me know in the comments down below. Give me a thumbs up if I said anything that was beneficial, that you liked, that you have that key takeaway. And the bias for the day is down for now. I do expect us to finish up this retrace. Bias for the day is down. We may see NVIDIA and SMCI rocket on lower. Watch out below. Be careful. If you're long, make sure you know where your line in the sand is. If you're wrong, then book that profit out. Have a great day, everybody. Stay safe out there. I have 30 minutes of awesome coming up at 5 p.m. Make sure you're there. It's my only request show of the week, where I'll take your request for at least 30 minutes. See you at 5 p.m. Eastern later tonight. Make sure you're subscribed and hit the bell for the notifications when I go live. And have a great day. Stay safe out there.